Welcome to the Tesla Economist. Please hit the thumbs up and remember to subscribe. You can also follow me on Twitter and talk to me on Patreon. We were talking about the level of vertical integration that Tesla has created with everything they offer. We also went over how Tesla finances cars too. Well, I thought we could elaborate on what benefits Tesla have on controlling auto financing and what it means they can do for their customers as a result. Sort of like how Tesla are able to reshape car insurance and further reduce the cost of owning a Tesla through incredibly intelligent vertical integration. Well, could they do something similar for finance? Although Tesla would struggle to reduce interest rates or cut the overall cost of payments to be more competitive compared to how they are with car insurance, as Tesla would likely be borrowing the money themselves and would simply borrow the money at a cheaper rate than the rate they offer their customers and take a cut. It wouldn't make sense for Tesla to use their own capital to waste with a 2 to 3% return, not when Tesla can build gigafactories and receive 100% returns. This is also where the majority of legacy autos debt is derived. It's from financing their customers' cars. Legacy borrows the money at the liability of the customer. The customer receives the car and makes payments back to Ford, who in turn pay off their debt, and the vehicles are the collateral through this process. Assuming that ICE cars hold their value and their customers can afford to make the payments, something which is not guaranteed and would likely create a very quick death for legacy autos. But Tesla does understand Tesla's better than anyone else, including any other finance company. Therefore, rather than offering more competitive interest rates, Tesla could offer a higher chance of being approved for financing to buy a new Tesla. Now, why can Tesla offer this over other car dealers? Because Tesla knows Teslas don't depreciate as much as other cars. So that if the owner can no longer make a payment, Tesla repossesses the car and resell it for more than what it is owed, as the car has lost very little value, or even gained, especially relative to what the customer has already repaid in principal. This therefore reduces Tesla's liability, as it is not depreciating as fast as traditional autos. This is the liability other car finance companies have. They are lending on a rapidly depreciating asset compared to a Tesla. Therefore, they need these cars repaid quickly, within usually around 5 years, along with a sizable deposit to cover more depreciation. But what if the car doesn't depreciate as much, like a Tesla? This means we can rethink the economies of car financing, just like how houses do not depreciate, which is why banks lend for 30 years rather than 5 years, as that asset class is literally as safe as houses. Although it doesn't mean you can have lower interest rates, it does mean you could have a longer term loan, say 10 years instead of 5, which would make for lower monthly payments, although the interest remains the same. Of course, you could always resell the car after 5 years, despite financing remaining on the vehicle, and pay off the loan when you sell the car, but it would have meant in the meantime the payments were much lower. On the other hand, it's a Tesla. They'll last much longer than 10 years and remain up to date. Can you imagine what this would mean for the compact Tesla? Perhaps payments would be as little as $250 a month with a minor deposit over 10 years. That alone is the average amount an American spends on fuel. A lot of the numbers I base things on are in US figures. For one, that is the majority of my audience, but it is also currently Tesla's largest market and likely to remain that way. But in Europe, gas prices are a lot higher, along with many other countries, but people are only willing to pay so much on fuel for their cars, and thus adapt to cars that have lower running costs. Sure, roads can be narrow in Europe and parking can be really tight, which is one of the reasons compact cars are so popular there, but the fuel cost is another. This is partly why diesel cars were popular, because diesel cost less than fuel. This means that not many people in Europe can afford high-performance cars, or anything that is even remotely quick. For example, running a V8 in the UK costs a fortune. As a result, they are rare. Therefore, the cost savings from fuel in Europe are much higher than in the US, added to the fact that for the equivalent running cost, you might now be in a Tesla Model 3, with reasonable performance, even from a standard range, compared to something of around a 1.5 litre engine. Teslas have more value in Europe. They are unfortunately a lot more expensive though in places like the UK. A Model Y starts at £55,000, that's over $75,000, but Tesla can charge what they want if people are still buying their cars. I mean, they are exceptional value when you compare it to the specifications of an equivalent ICE car anyway. And Tesla may start to drop prices eventually to make them more affordable and offer lower cost versions of Teslas, like the compact. But what happens when demand finally starts to decrease for even the compact Tesla? Well, that's what we're discussing. Tesla controlling the car financing experience means that Tesla could approve anyone they deemed able to afford a Tesla. Tesla controls all the steps through this too. If at any time a purchaser of a Tesla car who financed it was unable to make the payments, then Tesla could repossess the vehicle. Tesla can then put it in their used car inventory and resell it, or possibly add it to their own robotaxi fleet. I mean, the car could possibly even repossess itself. If the customer has missed too many vehicle payments and Tesla has decided to repossess the car, They simply press a button and it makes the car drive back to a Tesla service center whenever they want. No need for any tow trucks or third-party repossession companies. Maybe under financing they're even limited to 20,000 miles a year as to not take too much value off the car if they're repossessed. And once it exceeds that limit, you have to repay the financing at a higher level. Who knows? My point is, Tesla have so much control over their cars and so much data. If you bought a $25,000 Tesla on finance over 10 years with a small deposit, then it could cost something like $50 a week or so. But the savings don't stop there, as Tesla will offer reduced insurance premiums if you behave with your driving. And not only that, all the savings of maintenance and servicing, which the chances are a consumer who would be having to finance a $25,000 car over 10 years, well, if they owned a car previously, they likely didn't own something particularly new, which means it likely has a high maintenance cost as well and needs parts replaced frequently. Dare I say, this is even getting close to competing with public transport? Well, a monthly bus pass is around $100. That is half the price of the Tesla. So for the extra $100 a month, you could have your own Tesla. Sure, you have charging costs and insurance and things on top of that, but you get the idea, and you have to factor in the additional convenience that allows, rather than walking to a bus stop, waiting for buses, being uncomfortable, moving slowly. Sure, it would save you hours of time each month, maybe 10 hours. If you're worth $10 an hour, that's $100 a month, and it's break even buying a brand new Tesla compared to taking the bus. But this is not even the actual cost of a bus. This is what we pay to bus. These are subsidised by government and paid for by taxpayers. The real cost will be much higher and much more expensive than buying a compact Tesla. Oh, and after 10 years, well, those payments actually stop because you paid the car off, whereas the price of taking a bus has likely increased with inflation. It's almost like a Tesla for Clunkers program, except run by the free market instead of the government, so it actually works. Whereas Cash for Clunkers was a failure, it cost the economy a fortune. Now, can you think of anything else the government are about to do now that will not work and end up costing taxpayers an absolute fortune? Perhaps something also related to subsidies on new vehicles? Which is why governments need to stay out of business, separate state from business and monetary policy. This is what economics has taught me the most and why I love Bitcoin. Anyway, once a customer has made their last payment after the end of, say, 10 years, then you still likely have a Tesla that is still capable of driving a further million or so miles on the original batteries. The real question is, what do Tesla want? Is the aim for people to buy as many Teslas as possible, or would Tesla rather people use robotaxis? Depending on how you model it, a robotaxi is worth perhaps $15,000 to $30,000 a year to Tesla. Why sell something that valuable for $25,000? And this is an issue a lot of people have. Will Tesla even bother selling the compact Tesla? The thing is, Tesla have announced that there will eventually be a $25,000 Tesla, implying they will sell it to us. There would be a lot of disappointed Tesla fans if Tesla decided not to. Although the compact Tesla we hear will have no steering wheel or pedals and is therefore completely designed around autonomy. Anyway, that's a different subject. The point is, if Tesla's demand does start to ever fall, if Tesla are creative with financing, then they can offer a myriad of options to make a Tesla more affordable to consumers that no other loan company or auto company has been able to do in the past. The main reason being because Teslas don't depreciate like regular cars, and Tesla control more stages of the process through vertical integration. There is no company like Tesla, let alone no auto company. The plethora of possibilities and potential that circulates this organization is mind-blowing. I'm sure we're all still underestimating the vast capabilities of how Tesla can reshape all lives for all and offer more abundance in the world, removing old, legacy, antiquated, regulated systems whilst opening up technological capabilities that are possible in today's world. Thanks for listening. Please hit the thumbs up and subscribe. You can follow me on Twitter and talk to me on Patreon.